Question 21. A company purchased a warehouse for $35 million and incurred the following additional costs in getting the warehouse ready to use. $2 million for repairs to the building's roof and windows, $0.5 million to modify the interior layout to meet their needs, $0.1 million on an orientation and training session for employees to familiarize them with the facility. The cost to be capitalized to the building account is closest to. The capitalized cost of the building would include the other costs that are directly attributable to the building and are involved in extending its life or getting it ready to use. We have initial costs $35 million, repairs to roof and windows $2 million, modifications to interiors $0.5 million, and the total cost is $37.5 million. The answer is B. Question 22. Notes to financial statements most likely include A. A discussion of significant trends, events, and uncertainties that affect the operating results. B. Supplementary information about accounting policies, methods, and estimates. C. An auditor's opinion as to the fair presentation of the financial statements. The notes disclose information about the accounting policies, methods, and estimates used to prepare the financial statements. The answer is B. Question 23. At the beginning of the year, a company purchased a fixed asset for $500,000 with no expected residual value. The company depreciates similar assets on a straight-line basis over 10 years, whereas the tax authorities allow declining balance depreciation at the rate of 15% per year. In both cases, the company takes a full year's depreciation in the first year, and the tax rate is 40%. Which of the following statements concerning this asset at the end of the year is most accurate? A. The temporary difference is $25,000. B. The tax base is $500,000. C. The deferred tax asset is $10,000. The temporary difference is the difference between the net book value of the asset for accounting purposes and the net book value for taxes. NBV accounting we have 500,000 minus 500,000 divided by 10. and we get 450,000. NBV taxes 500,000 minus 0.15 times 500,000, and we get 425,000. Therefore, the temporary difference is $25,000. The answer is A. Question 24. The following data is available on a company for the current year. We have comprehensive income of 246,000, dividends paid of 60,000, ending retained earnings of 821,000, opening retained earnings of 580,000. The company will most likely report other comprehensive income as a gain of 301,000, B, gain of 186,000, C, loss of 55,000. We have ending retained earnings of 821,000, and we less the opening retained earnings of 580,000. And we add back dividend paid of 60,000. And we get net income of 301,000. Comprehensive income is 246,000. Therefore, other comprehensive income equals comprehensive income minus net income, and we get 55,000 loss. The answer is C. Question 25. A company that prepares its financial statements in accordance with international financial reporting standards is attempting to produce lighter and longer-lasting batteries for portable electronic devices. The most appropriate accounting treatment for the related cost incurred in this project is to A. Capitalize costs directly related to the development, B. Expense costs until technical feasibility has been established, C. expense them as incurred. While under IFRS, research and development costs are expensed until certain criteria are met, including that technical feasibility has been established and the company intends to use the developed product. The answer is B. Question 26. A company incurs the following costs related to its inventory during the year: purchase price, trade discounts, import duties, shipping of raw materials to manufacturing facility, manufacturing conversion costs, abnormal costs as a result of waste material, storage costs prior to shipping to customers. The amount charged to inventory cost is closest to the cost to include in inventories are all costs of purchase, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. It does not include abnormal waste cost or storage of finished product. The purchase price is 100,000 minus trade discount of 5,000, and we have import duties of 20,000. Shipping of raw materials to manufacturing facility is 10,000. Manufacturing conversion costs are 50,000. Therefore, the total inventory cost is 175,000. Answer is B. Question 27. An analyst has compiled the following information on a company. Beginning of the year values include share capital and retained earnings. During the year, we have revenues, total expenses, proceeds from shares issued. End of year values, we have total current assets, total non-current assets, investments, total liabilities. The amount of dividends declared during the year is closest to A. 150, B. 650, C. 300. Okay. Total assets equals current assets plus non-current assets. Our current assets is 9,200. Non-current asset is 12,750. So total assets equals 21,950. Assets equals liabilities plus equity. From here we know assets is 21,950 and our liabilities is 9,400. Therefore, equity is 12,550. Equity equals share capital plus retained earnings. Our equity is 12,550 and our share capital is 2,000 plus 500. Therefore, retained earnings equals 10,050. Retained earnings equals beginning retained earnings plus net income minus dividends. Our retained earnings is this number, and beginning retained earnings is 8,850. Net income is 12,000 minus 10,150. Therefore, our dividends equals 650. The answer is B. Question 28. Interim reports most likely A. are issued semi-annually or quarterly. B. include a full set of financial statements and notes. C. are audited. Interim reports are provided semi-annually or quarterly, depending on applicable regulatory requirements. The answer is A. Question 29. At the start of a month, a retailer paid $5,000 in cash for candies. He sold 2,000 worth of candies for 3,000 during the month. The most likely effect of these transactions on the retailer's accounting equation for the month is that assets will A. be unchanged, B. Decrease by 2,000. C. Increase by 1,000. Buying $5,000 of candies will decrease cash by $5,000 and increase inventory by $5,000. Selling $2,000 of candies for $3,000 will decrease inventory by $2,000 and increase either cash or accounts receivable by $3,000. So the combined effect is an increase of $1,000 in assets. The answer is C. Question 30. The use of estimates in financial reporting is best described as A. Acceptable despite the risk of manipulation by management. B. A factor that reduces the understandability of financial statements. C. Avoidable through sophisticated accounting and auditing techniques. The use of estimates creates limitations in the accounting model because estimates provide a vehicle for manipulation by unscrupulous management. However, estimates are considered necessary to the faithful representation of the economic performance and position of a company. The answer is A.